When you purchase a business, the insurance from the prior owner does not transfer. Basically, there are conditions in every single insurance policy that says that you cannot transfer that insurance contract to another party, even in the case of a stock sale where the FEIN and the business name remains the same. So you must discuss prior to the sale with the prior owner how they're going to cancel their policies and you're going to be purchasing new policies for your business because the insurance does not transfer. When you buy a business and you're buying the assets and liability, you might be buying the old insurance claims that haven't been filed yet. Because the insurance doesn't transfer, the prior owner needs to take the proper steps to make sure you don't have to end up paying for those claims and the defense of those claims out of your own pocket. Sometimes you got to consider whether or not they need to purchase an extended reporting period or something more commonly known as a tail. This basically means that the policy that ended, the policy they used to have that they canceled because you purchased the business, extends the time that there is for them to place a new claim for that old policy. If they don't buy it, you're the one that's paying all those bills because your new insurance policy isn't going to cover it. Before you buy or sell your business, you need to talk to your insurance agent. After the sale of the business has been completed, you could find yourself without any protection if the proper steps weren't taken at the beginning of the sale or before the sale took place. There are a lot of conditions on every insurance policy about how claims are handled when a policy ends and/or a new one begins. So you need to be prepared before you purchase that asset and liability as to how the insurance policies are going to take place. Even if you think the prior owner never had a claim, sometimes the claims pops up from an incident that wasn't immediately reported. You need to understand before the sale is done how the insurance is going to handle that claim and what your responsibility or the prior owner's responsibility might be for that claim. When you buy or sell a business, that means that insurance policies are going to be canceled and there's going to be return premiums. And then how that happens depends on your insurance company. Now, most insurance companies just send a check in the name of the business that purchased the policy. So if you did a stock sale, that means that you sold all the assets and liabilities, the FEIN number didn't change. This means that the check will go out in the name of the business and the new owner will receive that check. So you got to account for it at closing. If it was an asset-only sale, meaning you only sold the assets and you kept to the corporation, well, the only thing you really have to keep in mind is that that bank account has to stay open, otherwise you may not be able to cash that check. Understanding this means that the right party will receive or get credited for the return premiums and everyone can leave that sale much happier. When you're absorbing or acquiring another business into your own, you need to talk to your insurance agent. The adding of locations, additional property, additional sales, and possibly even a change in operations will have a big effect on your insurance coverage already in place. So you'll want to talk to your agent before the acquisition to make sure what that means to your bottom line. The business you're buying also had an insurance policy, but that coverage ended the moment the business changed hands, even if it was a stock sale. So you'll need to discuss with the prior owner and their insurance agent so that their policy can be canceled in a way to make sure that you aren't on the hook for claims that may come up later.